Hey, everybody. Thank you for coming. I promise you one thing. This will be a hilarious and eye-opening show. Just drop that comment right there in the chat. It is funny. 2 weeks ago, I talked about something called the Pear Trade of the Decade. We're going to analyze that after 2 weeks because it dovetails into all of the questions you guys are asking. Guys and gals, let's jump in. The story today will be covering, again, as I mentioned, Pear Trade of the Decade. I'll make some fun of myself. Thank you to the people in the community who make memes about me. How to get 75% more Bitcoin tax-free in just 2 weeks. It's insane. And it's pretty easy to do too. We'll talk about DCA versus lump sum, people having a little bit of FOMO right now, bunch of price targets. We'll talk about buy, borrow, die strategy, HIFO, LIFO, FIFO, FIFO, got that right, yep. And a whole bunch of investing secrets and tricks and everything else. Let's go. Thank you to the mods in the chat too for being here and helping make this place a secure place. And a quick reminder, by the way, I will never add you as a friend on anything, all right? I will never add you on X, on Instagram, on TikTok, on whatever platform, Discord, anything else. And I'll never reach out directly. If somebody does, it's not me. Look at the names. It just, everybody, please. Scammers are really, really upping their game these days. And disclaimer, not financial advice. Let's go. And all the questions come from Patreon. Shout out to Patreon making this possible. This is my favorite segment. It takes 3 days to prepare, but it also helps me sharpen my knives. Therefore, it's going to be good for you too. Let's go. First one is from Alpha Leaps. You mentioned that the wealthy borrow against their assets instead of selling them. Can you please provide all of the specific details on how this works? Maybe use Tesla stock as an example. For instance, who provides the financing? What are the terms of the loan? How much can be borrowed? What are the interest rates? Payments? How does it all work? Excellent question. Now, we've covered it a few times, but I will go into a little more depth because it's becoming more common right now. People are getting, more wise to this glitch for many reasons. Not only can you write off interest on debt, but also it has very good tax benefits too if you're leaving assets to beneficiaries. So first of all, this is buy, borrow, and die strategy. And I'm sorry if it sounds a bit morose talking about death, but death and taxes are two things that are sure. So in the meantime, stay healthy and have fun. Enjoy the ride. Now, how healthy households avoid taxes on their growing fortunes. First of all, step 1, you buy assets. Step 2, you borrow against the assets. And then when you borrow against those assets, you buy more assets, especially ones that spin off returns. Very important. And the third part, you die and pass assets to tax-free to heirs. Now, of course, I'm painting with a bit of a broad brush here. Very much US-centric. I have no idea how this works in the UK or Australia or Germany or Brazil. But anyway, talk to your tax lawyer or whatever to figure this out because it can be kind of complex. But also, guess who also figured this out too? I call it the infinite money glitch from Michael Saylor. And this is just one of the things that he does. He buys Bitcoin. Then he uses Bitcoin as collateral for a loan. And then which he borrows against his Bitcoin. And then he uses the loan to buy more Bitcoin, and then he repeats. See? It's not hard. Everybody does it. Now, who can do it? This is kind of tricky. So you got financial institutions like banks and brokerages and specialized lenders that offer security-based lines of credit. This is called sometimes SBLOCs. LOC is line of credit, and SB is securities-based. Also, some people call them margin loans too. For example, you got firms like Robinhood. You can lend your stock out. I'll talk about this in detail for a second because you can actually do this in Robinhood. You can lend your stock out all the time. I get solicitations and offers. Do you want to lend out your Tesla stock? And I say no because I'm not interested in crumbs. Also, the people I lend it to go short Tesla, which actually can end up turning really good, especially with the short squeeze we had over the last 10 trading days. But that's a separate issue. So that's just Robinhood. They do that also. If you have a big bag and you work with special advisors like Wells Fargo Advisors, Morgan Stanley, etc., they provide such services. All the rich people do this. They fund companies by borrowing against their assets, whether it be Facebook stock or Microsoft stock or Tesla stock or whatever other assets it could be. The loan to value ratio, very important. Borrowers can typically access 50 to 95% of their eligible asset value, depending on the collateral, which is depending on the asset. Obviously, Bitcoin is volatile, so they're not going to give you a lot there. Sometimes maybe less than 50%. Also, Tesla is a bit volatile too, so it can be on the lower end as well. Interest rates. These loans often have low interest rates compared to unsecured loans or credit cards. Rates usually are variable, and they're based on benchmarks like SOFR. SOFR is SOFR, which is the Secured Overnight Financing Rate. You can Google it and find out what that is at right now. Also, repayment, important. Interest is added to the loan balance, but as your asset goes up, make sure it's an appreciating asset. You won't have to worry about that too. It's like borrowing on margin and paying 6%. When your asset's going up by 100% a year, you don't sweat the 6% interest per year. And the borrower's stock holdings serve as collateral. Remember, for example, Tesla, Elon Musk pledged a significant portion of his shares as well to be able to buy things like X back in the time. So that's who can do it. The advantages, let's talk about a couple of these. You avoid capital gains tax that would be incurred by selling assets. You write off the interest, which is a tax deduction. You maintain ownership and voting rights in whatever asset it is, like Tesla voting was very important this year. And you benefit from continued appreciation of the assets. Very important, but there's some things you don't want to do. These are the risks of buy, borrow, and die. Market fluctuations, for example, a bear market can lead to margin calls. And if the value of pledged assets declines significantly, you get wrecked, you get wiped out. Also, forced asset sales may be required to meet margin calls. So it could be aftermarket over a weekend and Morgan Stanley would just sell your bags. And change in interest rates can also affect the cost of borrowing. So that's basically how it works. It's not hard. Super wealthy have been doing this for 100 years plus, and it's available to you. But you do have to have at least significant bags. You can't do it with like 100 shares or something. You need to have normally $500,000 or $1 million plus to even get the attention of some of these players that will do this for you. But I think Robinhood has a much lower threshold. But check. And again, none of those places I mentioned are in any way financial advice. And be careful of doing this. Remember, the most important thing is do it on an appreciating asset. And I think as well, one other thing, as markets get more mature around Bitcoin, that will become pristine collateral in the future. So you'll be able to buy a house against your Bitcoin bag. Stake a portion of it, maybe in a Fidelity of the world, and they'll give you money to buy a house. So watch this space carefully. Next question is from Alyssa. A lot of ladies asking questions today, which is cool. Alyssa, I'm coming into about $350,000 for my child who is a minor due to the death of his father. Well, first of all, Alyssa, I'm truly sorry for your loss. But second, I'm very proud you were looking out for your child's future, because they are dependent on you now. So let's get into the nitty-gritty of this. The estate will be making payments of $5,000 a month. Since I already work and support my family myself, this will be bonus money. What is the best way to invest $5,000 a month for my child's foreseeable future? Merrill Lynch will not put a large portion in Tesla themselves, but are fine with us doing so on our own. Who else would you go with? The Magnificent Seven. You always talk about how diversification is important. Would you buy a duplex too, or invest everything? So there's a couple of interesting things that tie into this. And again, I'm not a financial advisor, but would be what I would do. First of all, it's nice to have that $5,000 a month come in, and that lends itself very well to building a balanced portfolio. But as I've stressed many times before, there are certain times when assets hit certain prices. Wait till the middle of this video. I'll show you how fast things can change in just 2 weeks. So watch for that. So first of all, diversifying across key narratives is important. Things like AI, crypto are very important narratives. Magnificent Seven is a bit frothy right now. Certain names like Apple don't have the growth that I would deem investable, so I wouldn't touch them. But there are others. like Tesla that are still undervalued. We'll look at some charts of that later. And every asset has a price. I like disruptive value. That's how I invest. That's how I made myself who I am. And Bitcoin should also be part of it, and perhaps a little in the leading L1, because you got time. You're investing for a miner. So you probably have 5, 10, 15, 20 years to sock stuff away. But remember, always keep your dancing shoes on. Let's dig into some of your questions. $5,000 a month lends itself very well to a DCAS strategy, dollar cost averaging on steroids, we call it. You can optimize entry points by buying more in bearish periods and less in bullish ones, or as we call the squeeze, and that can increase your returns while managing risk. So if you have that constant money, you can use that tool to determine exactly how much of what asset you buy at what time, and it'll save you a fortune over time, much higher ROI. Second, real estate. Let's talk about this one. You mentioned buying a condo. It is a good idea for a couple of reasons, but a bad idea for a few as well. Purchasing a duplex, if you live in one, rent out the other, that can work. That's a very cost-effective way of minimizing your burn. Also, you will add a tangible asset to your portfolio, stability against market volatility, and a future house for your child. The issue is headache and cost, and it's so hard to make things cash flow these days with current interest rates. Also, if you're living in a place where it's cheaper to rent than buy, it makes it very difficult to, make this work. And also watch things like property taxes, watch things like cities, make sure it's a city that has fast growth so you get capital appreciation. But right now, with the current state of real estate, this could be a secondary solution that you could do. For example, invest in disruption and crypto now, and then 1 or 2, 3 years from now, take your profits from that, then buy during a depressed real estate market time. That could be an option too. Other tools as well, considering you have that money coming in, the 5,000, use LIFO. Like if you have tax-free ability to invest this account for the child, that would be optimal. That way you can layer in, layer out of different investments. When things get toppy, watch for the section in the middle here. It'll make your head spin. Top and bottom indicator to get out of for things like Bitcoin. As well at tops, if you are invested in that, invest tax-free. Use the ETFs, for example. If you have a tax-free account but there's no Bitcoin, you can use the new Bitcoin ETFs as well. And when it comes to moving to cash during market tops, you can buy things like JLP, become a liquidity provider, make good returns for just a small part of the money. But that was paying up to 80% as of a week ago, but they've just dropped their rates as well. So that's kind of how I would look at it. Again, it's a lot of work. Start simple, get a little bit of what I call retirement bags. We'll talk about that as well in a minute too. And just wait. With certain assets, you don't want to be holding long-term. Certain things you do. So hope that helps. Next question is from Kyle. 3466. Happy Sunday, James. I have this ultimatum. Save my job wages to buy Tesla shares on a big dip, or just DCA like I'm in a race against the clock as soon as I get paid. With such an asymmetric bet, I can't help but feel a sense of urgency to increase my Tesla bag even further. So let's break this down. This is a very, very common question, and I'm going to insert a couple of things here to make it very interesting. First of all, let's talk DCA versus lump sum, because that's the heart of the matter you're getting at right here. This is a beautiful little chart, and it's the question of whether dollar cost averaging can beat lump sum investing. It's a very highly debated topic in the world of investing, and there is an answer. But DCA does remove the risk and volatility, but lump sum works best if you can nail bottoms. That's so important. For example, if you drop $800 at $10 stock price, for example, or invest $100 a month, you can see that investing a certain amount per month can actually be better if you spend the majority of time under the actual entry price of the lump sum. I'll show you a little trick you can use as well in a second. Also, this has been a personal challenge of ours for a long time. That's why we created the DCAS product, to be able to time and weight the amount of buys and also wait out buying into markets that are frothy. So this is a simple, crude explanation of that. And DCA during crashes can bring about exponential results, but lump sum earlier works out better, but more inconsistent returns. So the question is here, for example, if you go back, 60 years? If you can time absolute market bottoms where the blue points out, that's when you need to have that lump sum bag ready to go and you deploy. The rest of the time, DCA wins. Okay? So, lump sum only works if you can nail those bottoms. That's it. So let's talk about another example, like a little trick of Tesla. We had a glorious time over the last 18 months. We spent a lot of time under the 200-day moving average. First of all, I'll say beware of experts who talk about nailing bottoms. Gary Black and Meet Kevin nailed the bottoms. They sold out. They capitulated at the bottoms. When we were in the community, were buying hand over fist. We were buying at 106. We were buying at a lot at 150. 141, a lot at 160, 170, all the time, heavy load. And I have to stress one thing too. If your thesis does not change and the price falls, you buy a certain amount. The price falls further, you buy harder. So the harder it goes down, the more you buy. And I'll show you the power of this in a second too. This is the ATR model 2. The red shadow is the bear market, just to highlight what that means on this model. And again, you stack hard under the 200-day moving average. If you are not a sophisticated TA person, just drop the 200-day moving average in your trading view and watch. The further you deviate from that 200-day moving average, the harder you buy. And we had a glorious time here. When you get way above the 200-day moving average, like big spikes, that's when you see those little red sell flags. That's when you sell or you hedge. And I do recommend hedging rather than giving away your bags because, as we've seen with certain assets, I call it do not jump in front of a freight train because sometimes they will just keep on going up, especially during exponential times, which is what we're living through right now. Just look at NVIDIA stock over the last 18 months. So that's one trick. The other one is remember the destination where we are going. Per this, 420 is the all-time high. We're only at 250. Bizarre. But it's even more crazy. Even more crazy. This is the fun part of the video, by the way. So 2 weeks ago, exactly, I said, and it caused a lot of consternation out there in the market, exactly 2 weeks ago today, in one of these Q&A videos, I said that out to 2032, based on all my models, Tesla will more than 3x the return of Bitcoin. And people were like, no, nothing beats Bitcoin. But remember, this is the key part here. Look at the price 2 weeks ago versus today. I'll blow this up again. 2 weeks ago, Bitcoin was at 66.7. Tesla was at 177. Okay? Let's fast forward to today, shall we? 2 weeks later. Bitcoin is 56,938 and Tesla's 250. It's actually 252 in after hours, but we'll just leave it 250 now. Therefore, the multiples out on my price targets to 2032 went from Bitcoin was this one 9.34 to now 10.95, and Tesla went from 27.3 to 19.21. That is the crazy difference 2 weeks makes. Let's look at this another way, because this is, I always talk about pair trading and people mock me. They've even created a meme, which I'll show you in a second. This is how you can actually increase your Bitcoin bag. There's another question coming too. It's like, how do I increase my bag? Well, here you go. Simple case study. In just 2 weeks, you could have sold Bitcoin, and I didn't even pump the numbers to where they could have gone, ladies and gentlemen. 67.7. I just said 67,000. You divide that by $177, which is the price of Tesla, you get 379 shares. So when you're looking at assets, say pairs, everything is a pair, forget US dollars. Start measuring things in number of shares per Bitcoin or whatever, number of tokens per token X, token Y. Very important. So here you can see 2 weeks ago, we could have flipped one whole Bitcoin into 379 Tesla shares. Now, of course, I'm assuming this is tax-free, so just ignore taxes for the minute. And most people do actually trade in retirement accounts. Then 2 weeks later, you sell 379 shares. Actually, it would have been 12 days later because the market would have been Friday when you hit 252. You sell 379 shares for 252 and you get $95,508. Then you take that and you buy Bitcoin at 55 grand. You get 1.74 Bitcoin. In just 12 days, you can turn 1 Bitcoin into 1.74 Bitcoin like that. All right. And it's not difficult. It's all there in the pair charts and the models. And so much so, people make fun of me. Pair trading on steroids, math, money, and fruit. Thank you to the team that put this together. But when I mentioned pair trade of the decade 2 weeks ago, again, I was ostracized on the internet. That is what I'm talking about. And that is only after 12 days. Okay, so this can be done, but you need a process and you need to be a little bit analytical and time it right with the models. So I hope that helps. Net solution is lump sum works if you can nail bottoms. Right now, we are above the 200-day moving average. Therefore, DCA is the way to go. And if you want to really amplify your bags, pair trade. Like, this picture is so embarrassing, but like this guy. Anyway, next question. This is from Mark W. First time Mark has posted. Hey, welcome to the community, Mark. This is from Discourse, of course. Does it make sense for a proud crab to convert enough Bitcoin into Tesla to bring their Tesla holdings to 100 shares? They'd still be in the crab category after the trade. This crab currently has approximately 30 Tesla shares. Great question. So allocations do matter in how much you actually put aside. So let's look at first thing, because I know I'm going to get the questions. What's a crab again? So a crab, everybody, is somebody who has between 1 to 10 Bitcoin. Again, they are a whole coiner plus some. And then, of course, after that, your octopus is 10 to 50, your fish is 50 to 100, etc. And by the way, if you are any of these animals, please keep your security locked down. Do not talk to anybody who reaches out to you. They are a scammer, all right? Even if they pretend to be your grandmother, assume they are a scammer. Don't give them anything, ever. I actually had a fun scam call with somebody. They were pretending they were from Coinbase, and I wish I could have recorded it. It was hilarious. And I knew out of the first second it was a scammer. Because first of all, you can't reach anybody at Coinbase. How in the hell would they even call me? That's the first giveaway. And then they're asking me all this question. We see fraudulent behavior on your account. Can you verify some information? Oh, sure. What's your email? I make up a fake email. What's your social security? Fake social security. What's your password? Fake password. Do you use cold storage wallets? I said, no, I keep all my bags on Coinbase where it's safe. Well, can you download this application to make sure we can lock down your account before somebody takes out all your coins? Okay, great. Send me the link. And it was just, how people fall for this is shocking. And the only explanation I have is because of greed or fear or one of those weird emotions. Anyway, be careful, scammers. Sorry for going off on that rant. I'm doing that a lot lately. Let's get back to the question. You have 30 shares now. I suggest you get to 193 shares to support part of your retire on 2032 cocktail, depending on your years, etc. And this is depending on kind of my low target expectation for Tesla by 2032 is $2,681 a share. So if you had 193 shares, you need to buy 163 more. And I'll show you a cool chart that shows you exactly how many shares you get per Bitcoin in a second. So that's what I would do first. So definitely do this. This is what I mentioned before, how we need to think in terms of not dollars per share or dollars per Bitcoin. Think in terms of shares per Bitcoin. That's exactly how I think about MicroStrategy and Bitcoin. It's how I think about tokens with Bitcoin and tokens with with assets. Anyway, this is the Bitcoin Tesla pair chart. All right, i.e. the number of shares per Bitcoin. And it's been a volatile beast. You can see the all-time high was 900 shares per Bitcoin. That's when Tesla was in the toilet back in 2019. Great time to buy. I've been buying Tesla since between 2017 and 2019, all the way to today. And the range as low as 58 shares per Bitcoin. It was high as 900. So right now, we're at about 226. And we were at about 450 shares per Tesla per Bitcoin not too long ago. So when you see a big level like a 450, that's when you consider the flip, and that's how you can amplify this. All right? So always think in those dimensions and watch the chart very carefully. So the question is, what do you do now? Well, bite the bullet. I still believe out to 2032 that Tesla will outperform Bitcoin up until we get to a certain point. That tipping point actually is when Tesla goes to about $400 a share. That's when, and if Bitcoin remains the same price, that's when Bitcoin becomes more attractive. So remember, we're still technically buying cheap. And remember also the simplest rule in the world: stack under the 200-day moving average, because we know everything mean reverts, especially asymmetric bets like Tesla. So hope that helps. Build that bag. What did I say? 139 shares more you need to get. Let me verify that. 169. You got 30. 163 more shares is what you need. And 163 more shares will cost you, what's that? Nearly half a Bitcoin right now. So hope that helps. Next question is from VB Rank. Hello, James. Best decision I made in the bear market was to join Patreon. Thank you for everything. My question is, what's the best way to use Arb Cloud to stack more Tesla in a Roth IRA? What would you pair with? VB Rank, thank you. And as I always say, billions are made in the bear. The worst mistake anybody could ever make is leaving the community in the bear market. Joining at the end of the bull is probably the perfect time. But anyway, that's just fact of life. But thank you for spotting that out. Let's talk about this. We covered this before. How do you increase your bag? How do you increase your Tesla bag? Well, as I said before, you could do that by pair trading with Bitcoin. And the method above, pair trade of the decade. But Arb Cloud is designed specifically for assets that have significant amounts of Bitcoin on their balance sheet. It's an advanced model designed for identifying arbitrage opportunities between Bitcoin and its proxies, such as companies holding, again, big bags of Bitcoin. And the problem we have is Tesla does not qualify. Let me explain why it does not qualify. First of all, you want things that have a big holding as a percentage of market cap. For example, MicroStrategy is 55% Bitcoin. Galaxy Digital Holdings, 53%. Hive, 26%. Hut 8, 25%. Marathon, 18%. Tesla is 0.08%, so it is insignificant. You can't find the ARB like you can with MicroStrategy or maybe with Galaxy. I must look at Galaxy. Also, Semler, SMLR, is one you can actually use it for too, and we shared that a couple of weeks ago. So search Q&A videos, and I break it down exactly how you can use that. So be careful. Make sure. I like it to be more than 50% Bitcoin for it to work very well. Next question from MS1. I appreciate the knowledge and numbers you present, but I understand you can't have the capacity to look into every single coin stock. How do we do our homework? Understanding, valuing coin stock. Thank you. I learned this a long time ago, that most people can only be deep in one thing. Like go way deep in Bitcoin or way deep in Tesla. You can't be versed in 3,000 cryptos at all, unless you automate the process. So that's why I know a lot about model building. It's one of my favorite things to do, and that's why we've got a big team. And I automate models that analyze data. They take in data feeds from different systems, tons of different systems. These APIs cost thousands every month to fuel. Many more thousands to maintain as well, in terms of keeping the APIs alive, make sure the data works, make sure the model is refreshed and updated every single day. So the way we do that, for example, I have a miner model that does it for Bitcoin miners. I have equity models that do it for different equities that I look at, like Tesla. And I have this thing called the poop coin identifier. It's the crypto compendium. Built this first in 2021 because I noticed that understanding crypto was tricky, but if you had the ability to analyze all of the top 500 cryptos across 60 different parameters, you could find the winners really easily. And that's why we built this, and now it's available to the market. Also, a big focus of mine is the SCP profiler, which again does what the Compendium does, but just compares layer 1s, layer 2s against each other. And that's how you identify winners there too. That's how I became the Solana help desk, the only guy to pick it up day one because of these models. So that's how you do it. You automate processes. And by the way, I recommend that to anybody in life today. If you want to really be good at what you do, you have to find ways to automate data, processes, rules, use algorithms, use AI, and that way you get smarter. Otherwise, you're just going to be another person. You need an edge. These things give you that edge. Next question is from Malay M. I do not have a question regarding content, but rather something different. I have a PhD focusing on personality, subconscious, and how and why people behave the way they do from a neuropsychological perspective. And what I wanted to offer is I should have a look at your upcoming investment personality stuff from Dr. Malta Dietrich. Thank you so much. Vielen Dank. And yes, I'd love that. And yes, this has been a bear. I don't know where the slide has gone. Oh, here it is. This is the thing. I was hoping to get it up at the beginning of the year, but it has been really difficult to do. We're almost there. I fire an email to the Patreon inbox and we'll have somebody reach out to you and make you be a little bit of a beta user for this platform. This whole grand vision was to create a system at scale. Not for me, because I know my strengths and my weaknesses, but it's to help folks identify their blind spots and shore up those gaps. This is where the money is not only saved, but made. And it's pretty cool. It'll profile you. It'll show you what type of investor you are like and what type of gaps you have and how to fix those. And nothing like this has ever been done before. But that's what we do here. We build unique stuff. No point in reinventing the wheel, as I say. Next question is from Crazy Cat. Hi, James. For staking Sol, how do you decide which validators to use? Do you use more than one, or do you spread your bag over several validators? A very, very good question. And of course, Crazy Cat, you do that. You manage risk and everything. And I always have this rule of 10% for years. Okay? Never lend out more than, say, 10% of your Bitcoin. Rule number one from day one, never allocate more than, say, 10% to Bitcoin miners. I'm at about 5% right now. Never allocate more than 10% to Bitcoin proxies. I'm now more allocated to Bitcoin proxies because my bags blew up way beyond my wildest dreams, thanks to MicroStrategy. So certain things are there, but that's from your initial bag. But sometimes when results go really big, things can break. So this is how I look at validators. There's a website called validators.app. And for Solana staking, you can see them as well for other types of validators, I think, but I tend to just focus on Solana. And if you look at a couple of things, first of all, performance, you look for validators with high uptime, low skip rate, good overall performance scores. You'll also, regarding commissions, you look for validators with very competitive and stable commission rates. I actually like zero commissions as well. In terms of stake amount, make sure the validators have a good stake amount, i.e. not too small. But if they are big, that means they're trusted. You see the players here like Coinbase, Ledger, Figment, Helios, Everstake. Everstake has been around for a long time. They're one of the biggest and the best. Then you've got your level of, you want to pick validators that are in diverse geographic locations and data centers. I remember during the Ukraine invasion, I was actually in one validator that was actually in the Ukraine, and I decided to pull out of it for safety reasons. As it turns out, everything was fine. Nothing happened to them. But anyway, I was a little bit paranoid. And spread it around. Sol staking is safe because there's no slashing, but don't have more than 10% in one bag, etc. And staking is extremely lucrative when you have a position and you see how much extra you get every month or every period. It's quite mind-blowing. You continually have to update how big your holdings are, which is impressive. And you can easily get 8% from many of these players right now, and that is substantial. And people ask, well, how do they make 8%? Well, fees, tip fees, MEV, etc. That's how they get it too. So anyway, Next question is from Wayno. Hi, James. It's tax time in Australia, and I'm reviewing my self-managed super fund, SMSF, and personal account. After testing various cost-based methods across accounts, ACB, FIFO, LIFO, and HIFO, I found that HIFO works best for me. Interestingly, HIFO can be used in both Australia and the US. It makes sense, especially when you're hodling and engaging in short-term trading. Have you considered adding HIFO exit type to your indicators? And by the way, your IA suite is fantastic. Cheers, Wayne. Thank you for that. So I did look into HIFO. HIFO is highest in, first out, which does make a lot of sense. So imagine you bought Bitcoin at $10,000 and then you bought it at 60 and you have 2 Bitcoin. One is at a $10,000 cost basis and the price falls to 55. You sell the HIFO, the highest one, first out, which is a 60K one, and then you can write off a loss. So that's kind of how that works. And you're right, that does work. But let me explain a couple of things about the drawbacks of HIFO. First of all, compliance requirements. HIFO does require extensive documentation and record keeping to track the cost basis of each asset accurately. And even small mistakes can lead to non-compliance issues, which can be a real pain in the butt. Also, there's potential for higher short-term capital gains, as HIFO may trigger more short-term capital gains than FIFO, i.e. the most recent purchase in the example I just gave. And that can push gains into a higher tax bracket. And it's also complexity. HIFO is far more complex to calculate and track than other methods, requiring more time and effort. And HIFO, despite you say it is allowed in Australia, it's not widely recognized or accepted, and FIFO and LIFO are the standard in accounting practices. So that's some of the drawbacks right there. The other advantages of the other methods is, first of all, simplicity. FIFO and LIFO are generally simpler to implement and understand. Wider acceptance. FIFO and LIFO are more likely, widely recognized and accepted accounting methods for both financial reporting and tax purposes. Also, it's consistent with GAAP if that impacts you or your business. And LIFO is accepted under certain conditions, but FIFO is the main one. And tax advantages. LIFO does provide tax benefits during periods of rising prices by matching current costs with current revenues, I should say. And financial statement impact. FIFO provides more accurate representation of value, etc. But in terms of why we don't do HIFO, first of all, the FIFO-LIFO calculations we do is extremely complicated on the back end, extremely complex. But HIFO would be almost impossible to manage. We'd have to track almost every single transaction that you have and then give you the reporting for that. It's really just designed to help you with back testing to determine exactly which method works best for you and for your tax reasons. But HIFO is way beyond the realm. If you want to do it, you can. But again, be prepared to always be compliant and have impeccable records. But for us, it's not accepted and it's too complex. And I would do nothing ever to trigger an audit. In fact, I purposely overpay taxes to make sure I never mess with the IRS or the tax authorities. And I don't mind giving back either because they spend it well. If anybody got that. And helping animals, favorite part. This is Bambi, a former circus pet. Bambi waited 7 years at the zoo before the sanctuary and had enough room to keep her. She experienced a decline in health during this time at the zoo, but now has recovered and enjoys exercise and the wild and everything else. So big thank you to everybody. And tomorrow morning, 7:40, we normally do 7:40, DCA Live will be back with Mando and CTO, and I will be moderating. I'll be asking the questions. So hope you like the content. Interesting questions today. Remember, this is golden. Everybody asks me, how can I increase my bags? How can I become a whole coiner? Pair trading, everybody. Pair trading. If you get nothing else in this video, and this will burn in your memory of why pairs are important. Let's go with some live questions. I'm sorry, I got to have fun doing this. Hope you guys don't mind my humor. And big thank you once again to everybody for coming and the mods in the chat. Let's get to some live questions. I better drink some tea first as well. from my trusty Patreon cup. Cheers, everybody. Miles in Arizona. Thank you for all you do and the team do. Thank you so much. And a big thank you to the people behind the curtain. I am nothing without everybody. And it's been a great 3 years. Justice for All. Team Metallica. Curious in your thoughts on Holdium from a security standpoint. I own quite a bit of Bonk and Wen, so want to max returns there. I don't even know what Holdium is. I have no clue. Let me have a look and see if I can find it. And I tend not to play with meme coins. What is Holdium? It's an airdrop for Solana. Wow. Airdrop is 71%. Okay. Airdrop is 71% of the total supply, which means that's for wallets registered up till the 12th of July this year. Points are based on how much activity there is across with Bonk Mew, whatever that is. What I recommend, Justice for All, you got a big bag of this Holdium stuff, you sell it before everybody else does, okay? And then wait for it to bottom out, and then you can get back in if you want to. Think of that as a kind of a pair trade, or I'll put it into Bonk or something. But when you have, what did I say? Massive air dump, 71% air dump. That means a lot of people are going to get it, which means a lot of people are going to sell it. So be careful out there. Charles Kincannon, with the increased power demands for AI, any opportunity? Yes, absolutely. Look at the largest supplier of stationary storage on the planet and buy them. Company's name is Tesla. They not only have, they are not only the number one provider of megapacks, but their deployments went up 137% over Q1 this year. They went from 4 gigawatt hours to 9.4 or something, quarter over quarter. And that business, 25% margin. And they have customers out the wazoo. Keep it safe. Don't overthink it. Be careful with a lot of people talk about these small little nuclear fission reactors as plays. But when I hear people like Bill Gates are in that space, I don't like it. I guess it just leaves a bad stain for me. I stay away from what he touches. Ugh. Anyway, yeah, Tesla. It's easy. There's 11 monster businesses within Tesla. $11 trillion plus opportunities. Don't overthink it, Charles. And if you want to increase your Tesla bag and your Bitcoin bag, pair trade them. That's it. Somebody asked me the other day, should I just focus on pair trading Tesla and Bitcoin? I said, yeah. If you have the sophistication of the tools, do it. That's all you need. You don't need anything else. They're not correlated, which is good. Doc Intern shared your YouTube channel with several younger family members at the 4th of July family reunion, and a few are going to sign up on Patreon. No better gift for the next generation than the best financial educational plan. That's so cool of you, Doc Intern. I mean, yeah, we have, there was kid the other day, he was like 17 in the community. You know, he already had about 20, 30 Tesla shares. It was just melted my heart. You know, these are the people that will be ahead in the future in a big, big, big way. Very touching, I must say. So let's get to another question. Sorry. The tea is making me choke. Stephen on PS4. I'm trying to use the ATR on NASDAQ. Good idea, or do I need other tools? So this is an excellent question. You got to remember, when you look at something like, I don't know why this screen has gone bonkers. When you look at something like the NASDAQ, it's a stodgy index, okay? There are a couple of companies in the NASDAQ that drive the NASDAQ. The rest is just, ugh. It is tech, but not big movers. Use the ATR model for things that are volatile. Now, when you are in the ATR model, and if you're using stodgy indexes, flick it to deviation, not trend. Use trend for stocks. Use deviation for FX, foreign exchange trading, for indexes, commodities, gold, that type of stuff. But no, don't trade the NASDAQ. What you can do, though, if you are heavily exposed to NASDAQ stocks, tech stocks, AI disruption, and you see ATR on the 12-hour or the daily chart getting really toppy on the QQQs, maybe use that point to throw in a hedge on your bags. That's the only way I would use it. One fit pork chop. Any models or forecasts on SCS? I, like you, am a bit of a gambler. I enjoy their product and I'm invested. I'm curious on where you think it could go during the banana zone. I think online gaming, and I mean gaming, not video gaming, but gaming, like betting on sports and stuff, is a huge market. It's growing more and more. Humans are getting more desperate, more degenerate. I actually use it to bet on UFC fights. And I think I've made about 9 bets. I've lost 1. 1, maybe 2. Or, yeah, I think one was a really nasty cut that knocked the person that was supposed to win out. But it's fun. And I have a bag of Solana on there, just leave on there. I use a VPN to use it. And it's just fun. And it's very lucrative. It's very hard to say where this thing will go. I don't even know what the price of it is. Like, I get into these positions, SES token, and I wait a year. That was always kind of my commitment. Yeah, this is weak. But where will it go? I don't know, 3 cents, 5 cents. And these things are tiny, really, really small. But the market cap, actually, let's check out the market cap right now. Wow. Market cap is $6 million. And it has thousands of users every week. And it makes a lot of money. So that is, I didn't realize that it could fall in so low. That was stupid cheap. I think we first got in when it was like $10 or $20 million. Now it's a third of that. But all these altcoins have gotten hammered too. So yeah, I mean, it is a top 3 gaming blockchain company. They've been around for a long time. They have every sport out there. Does it deserve to be at a market cap of 6 million? The answer is no. Banana Zone, that could be a $50 million market cap. If the crypto market cap goes to like 10 trillion or something, 6 to 10 trillion, which was at 3 trillion not too long ago, doubling, maybe tripling. If that's the banana zone, if that does happen, this should easily be a $50 million market cap, which would mean, well, nearly a 10x from here. So hope that helps. Not financial advice, of course. And yeah, I don't care. The reason I bought some SCS is because I make a lot of money in SCS betting on UFC fights. I don't bet on Formula One. It's too many variables. But I find the UFC fights very easy to identify the winners. And when the odds are good too. Sometimes it's an odds game too. So hope that helps. And thank you for your super sticker. Andy, Bitcoin Broccoli, Saul Strider, Angle Blackson, Glenn Joe, Forrest M, Signal 103, AZ, Rolfer. Thank you all for coming, everybody. Happy Sunday. Thank you to the mods in the chat. And I'll see you all tomorrow morning on DCA Live. Early as can be now. Let me see if I can. I lost my screen. There it is. Thank you, everybody. Have a good night.